So you've started a business and you have opened your LLC and now you are spending money and you are making money and it is all over the place. You're using your personal card for things. You are transferring money back and forth and really just hoping that it all makes sense later. Well, truth of the matter is, if you don't correct it now, it is not going to make sense later. We need to fix that because the way that you fund your LLC and the way that you operated in the beginning actually matters. It matters for tax purposes, for your bookkeeping, for your protection, and how you take deductions within your business as well too. So if you haven't been following me for a while, my name is Keisha Randino. I am a business and real estate CPA and tax strategist. I teach you how to use a tax code to save on taxes, keep more of the money you make, and build wealth in your business and your investments. So let's get into it. When you first open your LLC, money does not magically just appear in it. There has to be some way that you have money in order to spend it for your business. You have to put money into it. And how you do it sets the foundation for how everything works moving forward. This is where many people tend to get tripped up at. They just start using their personal money, swiping cards, and really just mixing everything together. And that is exactly where the problems start at. That is the wrong way. New LLC owners pay for business expenses with their personal accounts. They make random transfers and they don't track what those transfers are for. They deposit income into their personal accounts instead of the business, and they have no clear record of what belongs to the business and what belongs to them personally. And then when tax time comes, everything is confusing, it's messy, they are not sure what they will be reporting, and they're pretty much just all over the place with it. So let me tell you the correct way in order to fund your LLC. The first thing you want to do is open up a bank account for your LLC. This is where all your business income is going to go, your business expenses are going to come from. And if you want clean books, this is non negotiable. You have to have a separate bank account that you are operating in for your business. The second step is that you are going to do what's called make an owner's contribution. Because when you get started, you are going to need to put money into the business so you can operate. That is called a capital contribution. When you transfer money from your personal account to your business account, you are going to record it as an investment into your business. That process is very simple, it's clean, and it's traceable. And when you record it correctly, it ensures that you are not taxed on the money that you are investing in your business because that is not considered to be income. That is simply your investment. So you want to record it correctly so you're not taxed on it at year end. The third step is paying all of your business expenses through your business bank account. Again, you're not going to use your personal card, you're not going to use your personal account. You're going to use the business bank account where you can keep everything organized and traceable. And the fourth step is making sure that you're paying yourself the right way. We've talked about getting money in the business, but now let's talk about how you take money out of the business. It is going to depend solely on your setup. So if you are an LLC, you're going to take owner's draws. If you are an LLC that is taxed as an S corporation, you're going to receive payroll and distributions. And so, as you're taking money out of the business, just make sure that you are not just randomly making transfers from one account to another. Whenever you want to, you want to be intentional about it and you want to track it properly. I know I've talked about being organized through this process, but the foundation of funding your LLC, it's not just about being organized. It affects your bookkeeping, your tax strategy, the ability to take deductions at tax time, audit protection, as well as your overall financial stability in operations. When your money is clean, your deductions become a lot easier and become a lot clearer. So if you're making good money, but your finances are messy, you're working a lot harder than you need to. And I see this all the time, especially when it comes to my high income earners. They focus on making money, but not managing it. And that's where the breakdown happens. And that goes for whenever you need to invest in your business or add more money to your business. You always want to do an owner's contribution whenever you need to fund it because you don't want to be taxed on that money. If you've already started mixing accounts and funding your LLC the wrong way, you don't need to panic. It can be cleaned up, it can be corrected. But moving forward, you do need to do it the right way. Your future self, as well as your CPA, will absolutely thank you for it. If you want to make sure that your business is set up correctly from your LLC to your tax strategy, then go ahead and book a call with my team using the link below in the description box. And if this video has been helpful for you, make sure that you like and subscribe. I look forward to seeing you in the next video. Bye.